So Jerome Powell today just shocked the markets. Majority of people was expecting him to come out with a dovish tone. Even though he cut interest rates, how come we saw a stronger dollar and a weaker stock market? So this video, I'm gonna just break down everything that happened. Also, key headlines that he said that caused this hawkish reaction. And hopefully this information help you guys out so you can start trading this more profitably in the future. All right, guys. So if you guys like these videos, definitely like and also share with another trader. When you like it, it helps the algorithm to find other traders like you so you could profit from this information, okay? Because I understand in this industry, they tell us a lot to stay away from news and headlines. So I want you guys also to hit the notification bell because when I go live for events like this, you'll be able to trade it with me so you can capitalize, just like how a lot of members are doing. Let me just give you guys a snapshot too. This is inside the private group. So you could already see took advantage of gold sales, making 6 grand right here. Took advantage of sales also $200 because we called everything as expected, right? You could just read this. Gratitude must thank you for the support. I'm glad to be a part of the community I've joined. I have a shift in the way I look at the charts and understanding of fundamentals. It's all making sense now. Like this is amazing, right? I want this for all you guys. So if you guys are interested in joining the private group, link is going to be in the description, or you could press the link in the bio if you want to be a part of this to learn how you could actually take advantage of data like this yourself. Okay, guys. So let's go right here. I'm gonna start off in the beginning, right? Because when we're trading these events, you have to understand that it's not random, right? We have to look at outlooks because when it comes to interest rates, they're either going to give a hawkish outlook or a dovish outlook. So, depending on the outlook, that's where the direction of the markets is going to go. So, before the actual rate decision, this is what we prep for so that we're able to capitalize and understand what he's saying. Because there's also Jerome Powell is very good at his words where he could give us nothing. So we have to understand what's not a tradable opportunity as well. So the hawkish outlook that we was going to look for today, expectations was a 25 basis point cut already. But in order for us to get a hawkish reaction, and for those that don't know, a hawkish reaction, it means that they're going to pause interest rates, right? The markets is expecting them to pause interest rates or a hike, but we know they're not going to hike rates. But we was already expecting a cut. But what could lead to more forward guidance, right? So that means us, the markets, we want more assurance. If he is not confirming additional rate hikes. So forward guidance means what is rates going to look like in the future? In order for us to look for a hawkish reaction, we want to see if he signals less aggression on the cutting cycle, holding back on rate cuts. So that's one expectation. Also saying that he's going to be more data dependent, or if inflation is still high, sticky. If he mentions that the government shutdown is going to cause them to delay their expectations on future rates, right? They're flying blind right now, obviously. How are they going to decide what's going to happen for December's meeting if they can't see economic data leading up to that point? So him showing that type of concern could lead to a hawkish reaction, right? And just to speed up, if he talks about the labor market is still strong, if inflation is still high, right? So remember here, if he gives comments about tariffs and global tariffs is causing upside to inflation, right? Now with the dovish outlook, we just want the exact opposite. With a rate cut, we want the forward guidance to lean more aggressive towards rate cuts, right? We want him to say, yeah, we're going to be cutting interest rates because we see a slowdown in growth. We're cutting rates because we see inflation is still lowering. We see a slowdown because labor data is weakening. So when he says that stuff, we expect a dovish reaction, which would be a weaker dollar, weaker yields, but stronger equities and stronger gold. So you guys can see like the time zone. When I sent this, it was at 11 a.m. So you can see that this is how we prep before the meeting. So when the meeting actually came out, we watched it live, but this was the first one. He talked about we already expected that the Feds was going to stop quantitative tightening, but they call it the balance sheet, right? So they will stop shrinking the balance sheet. So this is them ending quantitative tightening, but this was already expected. If you guys have been watching my videos, following me on Instagram for my reels, I already explained that even Bank of JP Morgan already expected them to stop quantitative tightening this week. So it's already expected. Okay. So when the meeting first came out, well, say at 2 p.m., we got a cut by 25 basis points, which was expected. But then you can see right here, but there was two descendants, right? One was Myron, but Myron voted for a 50 basis point cut. But then the Fed, Kansas City Fed President Sherman preferred no cuts, which is a pause, right? So we got two descendants, right? The rest of the members of the 10 voted for a cut of 25 basis points. But those two descendants, right? One voted for aggressive cut, the other voted for no cut at all. So it shows that, but at least we can see why is Myron expecting a 50 basis point cut? What does he see? And what does Shermer sees to pause interest rates, which we want to focus on their comments moving forward. Okay. But what was the most important headlines that gave it away? And this is what I do for the group because he's talking for a whole hour, maybe like 2 hours. And it's a lot of information, but you want to be able to dissect what was market moving. Okay. Why did we see equity markets push lower? Why did we see the dollar gain strength? So right here, when he said December cut is not for sure, far from it, that was the forward guidance, right, of a hawkish reaction where he's not confirming additional rate cuts, right? So that gives us a hawkish reaction. He said this, higher tariffs pushing up some price goods. So he's confirming that tariffs is inflationary, right? So he's confirming that inflation is also somewhat elevated. So he's right now telling us that inflation is higher, is elevated. And now he's saying tariffs is impacting inflation. And then he's also confirming there's not going to be there's a possibility that they're not for sure for a rate cut. So everything he said is not overly dovish enough for the markets. And now it's leaning more hawkish. Okay. So this is why. And also I'll give you a few other things that he said as well. Let's try to right here. I could have like he talks about the government shutdown. During the shutdown, the Fed would have a view on the economy. No data disruption is temporary. Acknowledge the possibility of needing more caution in the absence of data, though not commenting on to the although not committing to the government shutdown. So he's saying right here, acknowledge that the possibility of needing more data. They're being cautious because they're not seeing the data. The government shutdown is what's messing it up temporarily. So this is what could impact the December's decision, right? You could imagine that the lack of data affects on December's decision. So we'll see that he's flying blind. And this could also impact the stock markets moving forward. So this is why the reactions, right? You can see dollar weaker. This is equities. We can see US 30 push lower, NASDAQ push lower, dollars higher, gold melted, which was a great trade. A lot of people took advantage of gold. Now just look at the reactions of the markets, right? We're also seeing the reactions of the markets actually show the hawkish scenario, which is great, right? Because now we could have an understanding on what to expect. So what we could look for moving forward, right? We got to focus on inflation data, focus on the government shutdown, focus on labor data, right? Because they're going to pay attention to this stuff to see what's going to happen at the next meeting in December. Because right now, right, the markets, they started pricing out. Let me just show you guys because this is important too. Right here, traders bets to December rate cut now at a 71%. So it's already fully priced in, like close to 100%. Now it dropped to 71. It's a possibility that this December meeting could end at 50-50, depending on what happens moving forward, right? So that's what we're going to be focusing on more is economic data, right? Hopefully this is helpful for you guys so you can get a better view, right? I took advantage of USD JPY buys, right? Right here, once we started breaking above structure, I took advantage of those buys when those comments came out of higher inflation. Because when we have stronger yields, right, the yields pushed up, dollar pushed up, and then we saw gold push lower. We broke below that support because this was giving us a hawkish reaction, right? We saw equities push lower too. Like the only reason why NASDAQ, I think, is not dropping the way that it's supposed to, because when it comes to tech, man, tech is not a sell, guys. So tech companies and Nvidia, Apple. Earnings in general is still very good. So selling the stock market is not a really good option, even though that monetary policy is signaling that they should stay cautious when it comes to rate cuts. But when it comes to sentiment, like growth, everything still supports a stronger equity market. So if we get temporary downside right now, I would still look at that for better buys longer term. All right, guys. Same thing for gold. I like gold as a buy from a macro perspective, but short term right now, we're going to see sells because trade talks are going well between the US and China, right? So that helps gold sells as well. With stronger dollar now because of monetary policy, that also continues to sells for the dollar. All right, guys. Hopefully this is helpful. Again, like and subscribe. Hopefully you guys like this video, okay? Because it helps the algorithm, it helps me grow. I love giving this information for you guys because if I don't do it, and especially in the Forex space, trading space, there's not a lot of people doing this, right? Yep. The videos that get bigger is the ones that show how I made $100,000 and they just show you charts. I'm actually showing you guys what's moving the market so you can learn to trade for yourself. Okay. So a comment, a like does help the algorithm, guys. I appreciate your support. Love you all. Trade safely.